Welcome back to weekly market review, and we are just going to be recapping what's been going on in the third week of January. In terms of volume, I don't think we are actually back full force in terms of volume. I think we are looking at a little bit more of a range of market conditions still developing on a lot of these currencies here. Let's take a look at the Aussie USD. There was an update on Wednesday. We are looking at a potential bounce or failures on the support area that we're looking at. We do still have that order block for the Aussie USD, and that still kind of have that support at about 65.25. We'll jump in on the hourly time frame next, but I just want to explain a little bit on what's been going on for this week. We have found a little bit of a support, and price has just become a little bit stagnant. That's on the Aussie USD, and for the Euro USD, it still remains within range at 1.0850 to 1.09. Pound USD, we did do a little bit of an update. This one pushed a little bit higher, but our view remains the same. We're still looking at potential failure at 1.27 at this point in time. There are still the momentum does still points for further weakness to the downside. It is a little bit flat. You can see on the pound USD here, it is still range bound, but we are looking at further weakness to the downside for the pound USD. The dollar Japanese yen, this one here has transitioned. It does it has completed a change of character based on a smaller swing in the market, and as well as on the larger swing, we have overcome the 146 yen barrier. This one here is currently pushing above 148.50. Might want to see if market is able to maintain the position towards the close of this week, and then next week we can start looking at potential positions to start picking up the dollar Japanese and for more of a long position. So let me just jump in onto the hourly time frame just to give you a little bit of a breakdown. This is the Aussie USD on the hourly time frame. We're still being capped by the Ichimoku cloud right now, still below that at 66 cents. I think for today, in terms of price movement to wrap up for the week, we're probably going to be closing closer towards the 65.50 range. 65.25 will likely still hold for the Aussie USD, but the projected range for the Aussie USD in the coming weeks would be at around 65 cents. Next up is the Euro USD. The Euro USD, similar situation. We're still being capped by the Ichimoku cloud. The Ichimoku cloud does seem very thin though, but this is pretty much negligible at this point in time because going forward, we're still looking at a very thin Ichimoku cloud. And this is still trading within that 50 pip range between 1.0850, 1.09. This is actually very hard to take a position at this point in time because in terms of risk to reward ratio, it's not going to give you a lot, but considering the current situation, as long as it's not above 1.09, we could anticipate potential selling coming in at 1.09 should price attempt to retest that level again. But at this point in time, I think if you are going to be positioning yourself for an intraday trade on Friday, it's much better to be on the short side in terms of the risk reward ratio. Just to give you a little bit of an illustration, it's not a trading idea, but just to give you a little bit of an illustration, if we are expecting this to be range bound between 1.09 to 1.0850, taking a look at the potential stop loss that we have, we're probably going to be looking at about 20-25 pips of stop loss and a potential gain of 30 pips. It's not huge, but it's still there. Risk reward ratio remains at 1.5 for the Euro USD here. Now let's take a look at the pound USD here. On Wednesday, we did put out a little bit of a video. We're looking at a potential resistance coming at 1.2675. We broke about 1.2675. However, the overall tone for this one here is that this remains below 1.2725, and for as long as it remains below 1.2725, we might actually see a little bit of a liquidity grab going on right now at time of recording, where it actually spiked above 1.27 and actually managed to close back down below 1.27. The key level to watch out for, and it is actually not 1.27. It's actually this swing that we see here today, this morning. That's going to place it about 1.2687. So we basically still need an hourly close below 1.2690 before we can actually trigger any short position for the pound USD. However, if we breach that level, we can actually use this high as a potential stop loss, or you might actually want to have it about 1.2725. We're still going to be targeting 1.26. Now the projection for the pound USD from a lot of analysts is actually for this one to go a little bit lower towards 1.2550 and potentially even 1.25 in the near future. But given the current scenario, if we do have that close below 1.2690, In terms of stop loss placement, we're probably going to be looking at about 40 pips of stop loss and about 85 pips of gains. That's still going to be about 1 to 2 risk reward ratio. Now, just to wrap things up, I just want to bring you up to date on the situation on the dollar index here. So the dollar index, we actually broke through this high here, that which actually takes it above 103. Now, the classification for this one here is actually really hard because we can't categorize this as a change of character. At the same time, we cannot categorize it as a break of structure as well. So we are still going to be looking at that swing high around 104. And if price manages to breach that swing high, then that swing high will be the first change of character that would be of significance, and that would be more of a turning point for the dollar index to potentially reverse its trend to the upside. So just keep an eye out on the movement on the dollar index here. So as per Outlook, and I mentioned before previously with the data released with the employment numbers in the US, the NFP numbers, the unemployment rate, that was all positive for the US. The CPI was also still a positive for the US. I think what we're looking at here is that market is kind of repricing in the potential rate cuts that could happen in 2024 by the FOMC. So that's pretty much it. That's a wrap for this week. So good luck with your trades. Have a fantastic weekend, and I'll see you on Monday.